Just came off air with Ciara Kelly, and now we're on Facebook Live to take all the questions we didn't get to on air. But we also might have time for a few more if you want to send them in as quick as you can, and we'll try and get through as many as we can in the next few minutes.
Okay, so this first one comes in. So how can a 60-year-old woman with an inheritance of 150k and no pension get a mortgage?
Okay, so you're 60 years of age, you've just got an inheritance of 150,000, which is a lot of money, and you're wondering, can you get a mortgage? It depends if you're working or not, but even if you are working, it's likely that you're only going to get a 5-year mortgage or maybe a 10-year mortgage. You'll struggle, but possibly a 5-year mortgage, so you need to have an ability to repay it. There is new loans coming out in the market. Well, they're not new, they've just been gone for about 10 years, called equity release loans for people who are kind of 50, 55, 60 plus, and what they do is they release equity in your home. They give you a chunk of cash. You don't make repayments on the loan every month. What happens is the repayments that you should be making get added to the loan amount every month. Now just think about that for a second. The loan repayments get added to how much you owe the bank every month, and there's compound interest, and it can accumulate up very quickly. So be really, really careful. The main question I'd want to know if I was speaking to you directly would be, you're 60 years of age, do you really need to take on a mortgage right now? What do you want the money for? And would there be better use of your inheritance in particular? But just get some advice on that. Be careful of those equity release loans, and you might get a 5-year mortgage if you've got an income coming in, and it has to be an income from a job, I'm afraid.
Okay, so I'm single with 2 kids and I'm a primary school teacher. I've saved 35k and looking at a rundown house for 110k. I want to be able to pay off my loan quickly, so what is the best loan for me? I was looking at the teacher credit loan, but the interest is 6.5.
I was actually, it's interesting you mentioned that the teacher credit loan was 6.5% interest. The best loan for you to buy a house is a mortgage. The reason why everybody should have the mortgage as their best loan is because of the interest rate you're going to be charged on it. There is no cheaper way, in Ireland anyway, of borrowing money, unless you're going to borrow from family or friends or something else. There's no cheaper way of getting money from a commercial bank than through a mortgage. And the reason for that is think about what a mortgage is. It's where the banks take security of your home, so that if you don't make the loan repayments, they take your home back off that, but they take their loan. They take the house off you and they get their money back. And because they have that such a strong security in terms of your home, it means they feel that they can charge you less because the risk is lower for them. There is no cheaper way of doing this, and unfortunately mortgage is the route to go. But just be aware, your concern here is you want to pay it back quickly. That's fine. You can pay a mortgage back. What I would always say to people is that if you want to pay a mortgage back quickly, still apply for a long term, like a 20-year or a 30-year loan, and just make extra repayments on a month-to-month basis. We've spoken about extra repayments before. I'm not a big fan, but if that's something you really want to do, don't be too concerned about what the actual term of the mortgage is. Provided you're not fixed, you will be able to make extra payments on it, but that's a whole different question.
Okay, so hi Owen, I'm about to go for a mortgage in the coming months, but I've missed a credit card payment of €70 due to error judgment, as I didn't have a direct debit set up, which has since been rectified. The next month I pay the €150, so I'm not in arrears, but is this a black mark against me? I've ordered my Irish Credit Bureau report and it's coming up clear, but my mortgage broker is saying otherwise.
So you've missed one repayment, it was an error of judgment, and the payment was made up the next month. This does affect your credit. The ICB, the Irish Credit Bureau report that you talked about, is useful, but you also need to check the Central Credit Register. That's the more recent one that's come up in recent times, and it's run by the Central Bank, and it covers lots of loans. The Irish Credit Bureau often covers larger loans, whereas the Central Register is the newer version, and it's covering loans, I think anything from €500 or above, so it's more likely to pick up on the credit card. The reality is that if you've already spoken to a broker and they've put it in, it means that the banks have a concern about it. Anybody who has a problem with their credit history, if they're applying for a loan, you are much better armed when the application is going in to say, guess what, when you look at me, you're going to find out that I missed a payment on this, or I missed 3 payments on this, or whatever it is. I'm not saying that it's going to fix the problem and you're going to get the loan, but what I'm saying is it's much better to be telling the bank about the problem than them coming and asking you about the problem, because you're on the back foot. So I would suggest anybody applying for a mortgage in particular that they do their ICB, the Irish Credit Bureau, they do their Central Credit Register, see if there's any problems there. If there's problems that aren't right, those things can be fixed. But then when the application goes in, if you do have a problem and it is legit and it is something that you did wrong, tell the bank about it when the application form goes in. It makes a massive difference. An underwriter's looking at it and going, okay, that makes sense, and doesn't have to make a big deal out of it if it makes sense to them. So I'm concerned for you because you've had a mortgage broker look at this already. I don't know how far they went with it, but there is an issue there, and you just need to try and tackle it head on. It's unlikely the mortgage broker has applied to everybody in the all the institutions, all the different banks. So maybe ask the mortgage broker to apply to somebody else and go armed with the information up front.
Okay, so this is from Rebecca. So, hi Owen, I had a tracker mortgage over 10 years ago. However, when moving to a bigger house, I bought some negative equity over with me to the new house with the new mortgage rate, terms, etc. I was never offered to keep my tracker mortgage for the new house. Should I have been offered to keep this? If so, what can I do about it?
Okay, so you moved mortgage from one mortgage, assuming you moved with the same bank. The same bank, I would have expected, should have told you that given you the option of bringing the tracker mortgage with you. It depends just when this happened and where we're at. What I would say there is there's been a massive tracker mortgage scandal where people have been taken off tracker rates without being told that they can keep them. People were on tracker rates, went fixed, and when they come off the fix, should have been offered the tracker rate again, and they weren't. And this has been a huge problem. The central bank is all over it. There's a lot of precedent there. And the banks have got their knuckles wrapped a few times by the central bank. The best thing you can do is don't ring your bank. Write to your bank and ask your bank, should you have been offered? The exact question you asked me, should I have been offered a tracker when I moved house? And they will have to, don't accept phone calls back from, just tell them you're busy, get them to write back to you and get it in writing from them. And that will be something that will quickly flush out whether or not they're concerned that they did the wrong thing or not.
Okay, so Joanne wants to know, is building a house more expensive than buying?
Building a house more expensive than buying, it depends who you're getting to build it, and it depends what type of finish you're going to put on it. You would usually find, and in ordinary economies, what would happen is that for every €100 you put into the house, there was times gone by where that would add €150 to the value of the house. In general, you'll get a different finish on a house that you build yourself because you will pick an awful lot more of the stuff than if you buy a house that a builder is building on your behalf, and they can run to be expensive. In the current climate, some of the stuff that you put into the house doesn't always necessarily increase the value of the house as much as you would hope it would do. So just be careful where you can get. I would say in general, you should be able to build cheaper than you should be able to buy. But people do run away with themselves when they're making the decisions about what doorknobs to have on the doors and what knobs need to be on the kitchen and what countertop to put down. Stuff that they wouldn't necessarily get caught up in if a builder was just doing it and selling it to you.
Okay, so hi Owen, I'm currently applying for a mortgage in principle with Permanent TSB. If I'm successful in securing this, does it mean I can't apply anywhere else? Bank of Ireland have a particularly good deal going at the moment, which offers you 2k if you save with them, but would that mean I can't go for that?
There is no loyalty to banks. If you get approval in principle from one bank and you want to get approval in principle from another bank, go for it. You can apply to as many banks as you want. Just be careful about applying to lots of banks because the banks see that you applied somewhere else. And they'll want to know, did you not get enough? Why were you refused? Why aren't you going with that one? Are you wasting our time? So the banks, the credit register will show that it might necessarily show that you've actually applied for a mortgage, but what it'll see is that the other bank has checked your credit history and it could cause flags for them. But absolutely, there's no loyalty to the banks in terms of you having to be loyal to one who gave you approval in principle. So if there's a good reason why you want to apply elsewhere, go for it. What I will say to you is the same as the person a minute ago who had a problem with their credit rating. If you are applying to a second bank, give them the reason and tell them that you've been approved elsewhere and tell them why they're more likely to get your business than the other bank is and why you're not going with the other bank.
Okay, so I'm currently saving for a mortgage. I have a 7k loan outstanding with repayments of €200 per month. My sister has offered me a lend to clear this loan, but I was advised not to clear it as it shows capacity to repay. I'm unsure what to do as I would like to use that €200 per month towards my savings instead.
Okay, so what's not clear about that is your sister clearing it and expecting the 200 a month to go to her, or is the sister just clearing it out of the goodness of her heart? What I would say is that ability to repay can be proven in lots of different ways. Loan repayments is kind of old school, yeah, and it does show I can take out a loan, I can pay it back. But saving money or paying rent and saving money also proves ability to repay if you do it in a very consistent manner, that it can be seen coming out of your bank account on a month-to-month basis. There was a time where that could only be proven with loans, but now it can be proved with loans, with rent, with money to mommy and daddy, whatever it is. Do be aware that 200 a month loan repayment is going to have a dramatic impact on your ability to borrow. Because banks, to keep it really simple, when they look at your ability to repay, they're going to calculate how much of your income on a month-to-month basis can they put towards loans. So let's just keep it really simple. Imagine you earned €1,000 a month. The bank will work out that roughly you can afford to spend €350 a month servicing loans. Now, that's all loans, not just mortgages, all loans. So if you have €200 a month already going out on a loan, you only have €150 a month left to pay off the mortgage that they want to give you. So it's going to dramatically, in that case, which is kind of a silly example, but in that case, you would reduce your ability to borrow by more than half. So if you could have got a mortgage for 100,000, you're now only getting a mortgage for €50,000. The maths don't make sense. It's very simple, but that's what I'm trying to explain to you is that €200 a month loan repayment is going to have an impact on your ability to borrow. Having 200 a month in savings and consistently showing that savings will prove the ability to borrow just as well, and you're going to save on all of that interest.
Okay, so this comes from Catherine. So I have a cross charge on my 2 houses with my ex and we've since split up. What can I do to remove it?
Unfortunately, so you have a cross charge across 2 houses between you and your ex-partner and you want to get them removed. The issue you have here, this is probably very much a legal question, but the issue you're going to have here is right now the banks have you 100% responsible for both mortgages and both houses, and they have your ex-partner 100% responsible for both of them. That's a good position to be in if you're a bank. And they are going to try and stay in that situation for as long as they possibly can. They're not going to make it easy, and it does carry forward for a long time. I would talk to solicitors, and I'm sure if you have an ex and you've got other ties together that there are solicitors involved, talk to your solicitors and just see, is there anything from their perspective? Open a discussion with the bank. If it's it's obviously the same bank if it's a cross charge, but open or maybe it's not, but open a discussion with the bank and just explain the situation and ask them, is there any way of separating these two out? If you can afford the loan repayments on the one you want to keep, assuming you want to keep one and not two, and you can afford the loan repayments and they can prove it, they may give you a mortgage to take the other person out. But then the other person has to have the financial ability to take you out of the other one if that's the route you're trying to go. It's an awful situation. The banks are in a good position. You're not. But just start discussions with your solicitor and start discussions with the bank.
Okay, so I'm buying a new build 3-bedroom house valued at 380k. It should be built in around October or November. The builder said he can add in an attic conversion too, which will increase the property value. Can I get a bigger mortgage to cover the extra 10k or so that it will cost?
Okay, first of all, I wouldn't be that keen on taking advice from builder as to the increase in value. If you really want the attic and it's something you want to do, absolutely have a look at it. 10 grand seems like something that would be a good deal depending on what the attic's going to look like, and it's much easier to do it now than it would be to do it later at some other point, because you haven't even moved into the house. As regards will you get a mortgage for the extra bit, you need to talk to the current bank that you're approved with, and it can vary from bank to bank. So I would say to you, if it's going to increase the value and there's a valuer is going to sign off on that, and not a builder but an estate agent is going to sign off to say this is what the value and completion will be, well then you have a good chance. But talk to your own bank, whoever you're approved with already.
Okay, so Tara O'Flaherty wants to know, hi Owen, why aren't you a fan of paying off a tracker mortgage early?
Because, why am I not a fan of paying off a tracker mortgage early? Because you have the bank and you are in the good position. You're in a strong position here. It's the cheapest. We talked already in this Facebook Live session about it being mortgages are the cheapest that you can get in terms of money that you can borrow. Tracker mortgages are the cheapest of the cheap. But let's be really clear about why I'm not always a big fan of paying off mortgages early in general. And then we'll talk about tracker specifically. If the interest rate you're paying on your mortgage is less than the return you can get on the money being invested somewhere else, after tax is taken into account, well, then it makes more sense to invest the money, get a better return, and keep that for yourself. And it's as simple as that. The likelihood of the tracker rates being so low, it makes it much easier to beat the return you're going to get after tax. And that's why I would say paying off tracker rates in particular doesn't really make sense. In simple terms, there's often much better use for your money than clearing off mortgages. And if you're not maximising things like pensions, if you're not maximising all the other investment opportunities for you already, well then it's unlikely that the mortgage is the right one. The other problem I have with it is once you start putting extra money, particularly on a month-to-month basis, off the mortgage, the only possibility, or most likely the time that you're going to want that money back, is when something goes wrong in your life. You've lost your job, you're not well, and you need cash. Once it goes off the mortgage on a month-to-month basis, you're closing the door on your options, because the bank will not entertain you if you've lost your job and you're looking for all the extra repayments back that you put into the mortgage over the years. So it closes things down. If you're really keen to do it, save the money on the side and clear the entire mortgage off early if you want to. But funny enough, what we find is that after 10 years, if you have a big chunk of cash in savings, people are less likely to use that saving to clear off the mortgage because they've better stuff to do with it.
Okay, so this is the last question. So this is from Joanne. So we are currently on a tracker mortgage. Can we add to this building a new house, or do we have to get a new mortgage?
When you port a tracker mortgage, so if you move house and the bank allows you to bring your tracker mortgage with you, or when you do that, or if you're extending the house and you need a top-up loan, the bank doesn't give you the extra bit at the tracker rate. If you can get them to, let me know, because that's deadly, but they won't give you, I'd be shocked if they were to give you any extra money. That's new lending, it'll be at a different rate, but it shouldn't affect the rate that you're currently on your existing mortgage. The existing mortgage should be left alone, and you should be able to get a top-up loan that will be at a different rate at the current new business rates. So that's it for the week now. We will hopefully be back next week with Facebook Live, and we'll be back, and certainly be back on Ciara Kelly next week at around 20 to 1:45 Thursday. Thank you.